Well, I'm joined now by Cornelia Meyer, who's a former oil executive and economic advisor to the Japanese government. Very good afternoon to you. The price of oil then has halved since June. Lower oil prices should be celebrated, shouldn't they? I mean, it's lower prices at the pumps for all of us drivers, but it also has an impact on all of our goods because all the transportation costs come down.
Absolutely. Oil is, as you rightly said, oil is the fuel for transport, so the transportation costs come down. A lot of, plastics and oil derivatives are cheaper. These lower oil prices have, according to my model, sort of injected about $1.5 trillion of benefits for consumers and consuming nations since June. So it's good news for consumers. It's not such good news for some of the producers. It's also not such good news for some of the renewable energy producers, because they're sort of benchmarked against the oil price, and if oil is low, it's less economical to do solar, wind and all of those good things.
So generally, obviously tough for the oil industry themselves, but what about for the economy generally? I mean, it does give people more spending power, doesn't it?
It does give people more spending power, and if you are a net importer, it's good for your economy. But if you, as your report said, if you're a producing nation, then obviously you get less revenues because you don't have as much revenues from your oil exports. So it depends on which side of the divide you sit on.
Well, yes, and what does it mean for the Treasury here in the UK? Because obviously the possibility of increased spending bias can be a boost to the economy, but at the same time you get less money in terms of VAT from petrol, and you also get lower corporation tax, presumably from the oil industry. So how does it balance out for them?
It balances out. It sort of balances out net. Yes, you get more consumption, and maybe there's more VAT on that consumption. But you certainly do get much less revenue from the oil industry, from the North Sea. You get less taxes from there, and you also see some of our big companies in this country really hurt. Let's look at BP. BP is really reeling in terms of the low oil price and its strong dependence on Russia. So that's a double whammy. Russia is down, and 20% they own 20% of Rosneft stock. So this is not very good for them.
So what's going to happen here? Because we've seen some of the reasons that this is happening, economic slowdown in some parts of the world, but also rising production as well. So a lot of people scratching their heads about OPEC. Why has OPEC taken the decision that it has and isn't acting to cut production?
I think they've done absolutely the right thing, because at some stage it's not the first time the market is oversupplied. It will not be the last time the market is oversupplied. And essentially, demand will need supply. As we said, it's a huge boost to consumers. So consumption is going to go up, and it will drive out some of the other producers, and especially the shale producers, because they're usually quite small companies, very dependent on cash flow. So now that they have less cash flow, less to invest, and the time lag between investment and production is much shorter in shale than it is anywhere else. So if you want to take out some production, this is probably the best way to go.
OK, Cornelia Meyer, interesting to talk to you. Thanks so much.
Thank you.